Welcome to Inside the Deal. I'm Suzanne Stevens. With me today is John Zieser. John is the Chief Development Officer, General Counsel, and Secretary for the media and marketing firm Meredith Corp. John, we're here to talk about the environment for distressed assets in media. So what is your take on the general environment for distressed assets in media?
I think there's definitely going to be opportunities in the distressed sale area. And I also would call those consolidation opportunities for us. And I think you're going to see them on the traditional side, in our case, magazines and television stations. And I think even more intriguingly, we're seeing it on the internet side, on the new media side, with what's happening in the finance markets and the VCs.
Well, and that's more of a growth area for you guys on the internet side. But are you seeing distressed assets there too, where companies maybe are fundamentally sound but are maybe over-leveraged?
The definition of distress is different in new media than it is in old media. The definition of distress in new media is my VC won't give me any more money. So I need to find another option to fund my payroll next month. That's where we step in because we use our strategic assets. We always say 1 and 1 will equal 3, and then we'll fund you.
Let's shift back to traditional media, so print and television in your case.
Right.
Are there buyers out there? Because the industry as a whole, there's a lot of uncertainty and a lot of distress industry-wide. So are there buyers for those assets?
Yeah, I think there are definite buyers depending on the assets. But I think what you will continue to see is you'll see a tendency towards strategics with available cash. And so it's not the old normalcy anymore. It's the new normalcy. Some funds, some hedge funds who have the ability to raise equity or some sort of mezzanine financing like preferred stock, they'll continue to be players, but I think private equity, the old model of debt financing, leveraged acquisitions, has fallen off the table completely. And I think that bodes well for strategic buyers, especially low-leverage strategic buyers who have the availability to, come up with $50 million without a lot of trouble.
But certainly if the asset that you're looking at has an ad-driven revenue model, it's going to be harder to make that deal make sense on paper, to make the numbers work.
At least from my standpoint, you're not looking at the same multiples anymore. You're looking at much more realistic multiples. In fact, we're having meetings with potential targets. We probably could not have those meetings 12 months ago. So they really did not see the need to find a strategic partner. They wanted to go it alone. They wanted to be independent. It's a lot different situation, especially in ad-driven models, because the cyclicality of the business is such that it's just much more difficult to make it on your own. You need a bigger strategic partner. Speaking
of partnerships, I know you've met with some private equity firms that are interested in distressed media assets and looking at the possibility of strategic partnerships. From Meredith's perspective, what's the value in that for you, and what might that partnership look like?
I think in this day and age, you have to be very creative. We talk to private equity firms, we talk to VCs about a range of different options. But, we talk to, if we're flipping over the traditional media side, there are opportunities that have been available and will become available in that area. Could very well be that we're a joint buyer with a private equity firm, if it makes sense. So, for example, we might be interested in certain assets of the seller. The private equity guys might be interested in another set of assets. Then we collectively figure out what to do with the remnants. We might bring in another strategic. So
creative solutions in an unprecedented time.
That's what it's
sure. John Zieser with Meredith Corp. Thanks so much for stopping by.
Yeah, thank you.
I'm Suzanne Stevens. Thanks for watching Inside the Deal.